The Australian stock market has crashed almost 10% in less than a week. And if you're asking, is now the time to buy the dip? Then sit tight, because we'll answer all of that and more as we give you 10 ASX stocks that could be the best rebound opportunities we see all year. As the brains trust behind Australia's leading government-accredited share trading education and regularly called upon by major media outlets, we'll show you the professional stock market playbook that actually works. I'm Dale Gillam, joined by Senior Analyst Philip Tortevsky and Head of Blueberry Sales Zoran Kresovic, and we're a wealth within. Good evening, gentlemen. How are we?
Good evening, yes.
Good evening.
Yeah, look, it's nice to have Zoran on with me. You don't normally let me have him.
An old friend, yes. We've got the old crew back.
The old crew back, yeah, you're in the middle seat, the hot seat.
We can go wild tonight.
Well, yes, Janine's not here. We definitely can go wild. But anyway, let's dive right in. Now, we've seen the index fall 10% in just a few days. Now, oil breaks $100 per barrel. I'm going to go and ask you what comes next, Phil, because I know you predicted it last week.
So this is a big question. Yeah, we did. You know, we mentioned oil was potentially going to go to $100 a barrel, given, you know, they have been the crisis prices for oil, Russia, Ukraine. We also saw during the Iraq period. But what was interesting about oil was that the spare barrels, you know, in reserve, and this is what measures the supply-demand dynamic, it was sitting quite healthy. And so a spike up past $100 was initial, you know, based on fear, and then we've seen the market correct itself now, which is, to me, sounded more in line with where we are. We're not sitting at that $1 to $2 million worth of spare capacity when it comes to the oil, which really allows that supply demand to get out of whack and see those crazy share prices. So I think oil's probably going to settle down over the next couple of weeks. I think the share market is going to continue to be volatile. You know, we're seeing real strong volatility, and it's day by day with what comes out of the war situation. You know, we're seeing a bit of a bounce today on the index. A 10% correction is generally, you know, quite healthy, and it would really cause for buyers to come in at this stage. So I wouldn't be surprised if we do see buying come in and continue the stellar run, because last week, let's be honest, our market closed at the all-time high. I mean, that's ultra bullish. And so if we hold 88 to 8,900, 9,000 points, like we have seen a bit of buying come in, I think potentially this is one of those, you know, lows forming. But again, it's a day-by-day situation. And even more to your point that you've been saying, right now it is time to be active and really monitor your opportunities, because if you're not doing that, one day can really wipe you out.
Oh, it does. Now, you know that seat, you've got to have the conspiracy theories and everything else, because that's Janine's seat.
Yeah.
Have any. Now, I would have thought you would have mentioned that oil's up at like 20% before this Iran crisis or something. It was up quite well.
Yeah.
Before that. And so why did that happen? So that's what Janine would have said.
Yeah, look, I mean, I like to stick to the facts.
I'm just stirring anyway. But now we have a currency expert on our show tonight. So let's get straight into what opportunities and risks the current environment has for the major currencies. Now, I know conflict and war are generally good for currencies. Yeah. What's your take on it, Zoran?
I agree with you. I think it's really good, especially for US dollar at the moment. And we've seen all the currencies kind of wear off or sell over the past week or so, and US dollar gaining a lot of strength and momentum. Because at the end of the day, it's all tied up, isn't it? If oil continues to go up higher, then obviously it brings up inflation. Inflation generally means the interest rates have to stay higher. And on the back of that, obviously, certain countries, you know, like US, where everything is denominated or predominantly US dollars, when you're actually doing foreign transactions, US dollar continues or reversed and actually gains some momentum. So in this scenario, in this playbook, I think US dollar is probably going to be the winner. And I think it's very well seen, given the fact that commodities front, gold and silver haven't actually done much over the past week or so, which is obviously another reason for US dollar to gain momentum and gain a lot of ground.
Can I bring that back home? Because obviously you talked a lot about the US dollar, and I totally agree with what you've just said. Is obviously Australians are worried about cost of living, if CPI going up, and if that goes up, will the RBA put interest rates up? And if RBA puts interest rate up, that will affect our currency as well. Do you see much changing here in Australia, or is it all more sort of US-led currency changes, etc.?
I think it's a great question that you asking me, Dale. I think it's a global thing. At the end of the day, like 20% of global oil supply goes through that Middle East channel, which is Hormuz, that's right. So, if you shut that down, then obviously a lot of countries that will be impacted. These countries like Australia, China, India, and obviously that would drive the price up. And that's what we're seeing over the past few days as well. Obviously, that would bring the level of inflation, consumer price index up, especially on the headline front, because they includes volatile items such as petrol. And if that continues to head higher, then obviously that would add a level of risk for the RBA to continue hiking the rates. Mind you, we've also, based on RBA's commentary, on Michelle Bullock's commentary, over the past few weeks, there is the elevated risk of inflation coming back in Australia as there is without this. And there is potentially another interest rate hike coming through maybe in May and June. But like Phil said, this is all on day-on-day basis. I've read news over the past 24 hours or last night that, this war might come to an end and, troops on the ground might not be needed. And then obviously Donald Trump is talking to Vladimir Putin now, the Russian president, and all of a sudden sanctions may be lifted from Russians because they might supply or add extra level of oil in the market. So things can change very quickly. I agree with you, Phil. There is an elevated level of volatility. It's likely to continue, and you just have to kind of follow your rules and your trading.
Look, I think that's what you just said is so critical for everybody watching, because we do see a lot of speculation out there, and it's like, you read the news and it says one thing one day and something different the next day, and everybody's making decisions on their portfolio based on what they're reading and what they're hearing, and it's changing by day, and you can't do that. So it really is, and Phil and I were only talking about it about 2 hours ago. It's like you've got to strip it back and go back to what you know and what you can confirm, but go back to basics. Don't have to understand world economies. You don't have to understand world markets. You don't really have to understand the supply-demand chains with oil and currency risk, etc. You just have to understand what you're doing with your own portfolio. So I think that's a really, really good point that you brought up. But I'm sure Phil's got some comments on it later. But anyway, stock time geniuses. Sorry, I was going to call them geniuses, but no, they are gentlemen and geniuses as well. Now, we've got some really great stocks to talk about tonight. So here's why you need to stick around till the end, because I want to go get your favourite stocks at the end of these stocks. But let's get into the first one.
All right. First up is ABB, Aussie Broadband. Now, this one here is really performing. We saw it come into a top breakthrough to a new all-time high in October 25. And I think the big important thing, Dale, right now with these stocks is they've all relatively pulled back like, most of the market. So it's trying to identify that opportunity, but the good opportunity, what's a pullback, what's in a full-blown, downtrend. It's what you were talking about before, finding the right stocks for the right goal and being safe in this environment. So I think
there's so many at the moment.
Yeah.
I looked at the top 20 stocks only 2 hours ago and I went, wow. There's so many that have pulled back and are looking good at the moment. But even I think on my own personal watch list for buy, I think I've got about 15 or 20 stocks to look at to buy over the next few weeks when things turn around again. But I'm digressing, so we better go back to ABB.
No, I think it's important. I think it's a clue into the mindset of how,
I get excited at times like this.
Right? Yeah, that's the thinking, because, obviously panic in mainstream media, billions wiped off the stock market, yet, you're looking at it and I'm looking at it and going, there are some amazing opportunities right now. So
I walked into the lounge room last night and my wife had the TV, the news on, and it was just the whole screen was red. Yeah. Like the background was red, the front of the desk was red, everything was red, and it was like talking about, it was almost like Armageddon Day. And I went, oh, what happened today? Yeah. And it was like, and I've often said to students, if this face is not panicking, we don't need to panic. I get excited at times like this, and I think anybody who understands the stock market can use times like this to profit more, whether it's shorting the market or whether finding good opportunities like what we're going to show them. But let's have a look at ABB.
Yeah. All right, ABB. Now, this one's quite interesting. Obviously, it's been in a really nice expansion. And Telstra's performed as well, to be honest. We have to throw that in there. But broken through to a new all-time high. We are seeing a bit of a correction. That is quite normal. What I like about this stock is that it is in trend. And the more we continue to hug this trend and continue to find buying support, these kinds of stocks, the telcos, I love them also for the reason is when you look at this chart, super clean, super easy to trade. If you're a new trader getting into the market, start here. I mean, this is going to make your life so much easier. Look how beautiful this price action is. And the fact that we're holding above these levels is quite bullish, because if you go back to July 25, the real strong buying started around that period. Yes, we've seen sellers come in to test that buying, but we're testing at an important level. And over the last month, we saw really strong buying come through. Think about how much weakness there's been in February and March, and have a look at this stock. It's still holding well above those lows it made in February and on this momentum line. So I think a nice trending stock in expansion, this is one to watch and find a really nice opportunity, because just even to that all-time high, I mean, you know, we're looking at 30-odd% upside, which is, for me, they're the really nice looks.
This is looking really nice.
Yeah.
This is something I'm treating this as an opportunity. It could be this last little dip for an exhaustion. I need to take it up again. So buying the dip sounds good to me.
That's the beautiful thing about technicals, because you find out very quickly what type of moment this is. Because very easily, if we just go back to that chart, and this is the thing we always promote, when you look at that chart on the screen, you're able to make that decision quickly and change views. The second it takes out this momentum and that support, you know, okay,
it's not a dip anymore.
The view's changed.
Yeah.
And I can treat it accordingly.
All right, let's move on to the next stock. Zoran, I'm going to give this one to you.
Sure. The next stock is
Aristocrat
Leisure. That's right. Got to get it right.
And this one's been going down since early 2025.
Yeah, and you know, it feels like a bit of a falling knife, to be honest, from an all-time high. Whilst it has actually somewhat retraced back up, it's actually continued the long-term downtrend, and that's 44% down. Like, so right now, it's a bit of a falling knife. I know many investors or traders will be looking to buy this. I actually wouldn't right now. I'd probably sit tight on it and see, you know, whether it actually can at some point consolidate. The interesting aspect is obviously the volume is increasing as the price is dropping. So to me, that kind of demonstrates there is actually a selling pressure to continue, and a lot more sellers than buyers. But this is very unconfirmed. It's looking very bearish right now, and fundamentally the stock might be good, might be top 20 or top 50, so you'll get a fair bit of liquidity in it. But overall, it's still not out of the woods, and probably the next level that I'd be watching is $40. We can do a whole heap of things on it in terms of the momentum lines and things like that, but right now it's looking bearish. It's definitely not one for faint-hearted, and I'd be watching it closely, but I wouldn't even consider buying it at the moment.
Do you think it's near the end of its downward move? Because what I'm asking is, should people be putting this on their watch list for a possible buy in the next 3 to 6 months?
Yeah, excellent question. The way I like to put things on a watch list is like I like to do green, yellow, and red. Red stocks are the ones that are consistently creating lower highs and lower lows, and they're actually not a buy at the moment. And then yellow ones that I might consider, I would need obviously signs and signals and rules to actually kind of align and then basically buy. And the last one is obviously the green one that I like to buy. So this one would probably go red on my list at the moment, because it hasn't confirmed anything to indicate to me that it will reverse. And even if it does in the short term, I still think the overall trend is down and it's likely to continue to do so. Good point here is January 2026. We can actually see the stock actually find quite a bit of support around $55 mark. And it was consolidating sideways for some time, and maybe a lot of investors or traders thought that it will reverse. Unfortunately, it was just basically part of a longer-term downtrend, and whilst it went sideways, it dropped out of it quite aggressively.
So that's obviously important. Obviously, at that point,
Absolutely.
it's not people getting in, like you were saying. It's not a dip because it fell through other support. So it's knowing when a dip is a dip and when it's not a dip, it's more of a crash, and catching a falling knife. I know Phil uses pink, yellow and purple.
Purple, yeah, like my hair on a Sunday.
Yellow and blue. But anyway, but what's the next stop?
All right, next we have Challenger. Now, I mean, even on Zoran's point, it's really important. I've been speaking with students, as you know, doing the mentoring recently, and identifying certain stocks, I mean, the environment that they're in, right? And when Zoran's right in what he's saying about Aristocrat Leisure, but he's coming from the mindset of somebody with experience and knowledge.
Correct.
And looking for the perfect timing. For me, when I look at Aristocrat Leisure, you go through the history and see the corrections, and you pick any top 20, top 30 stock, generally over time, a 40 to 50% correction, you start licking your lips.
We do, but Aristocrats also had a 90% correction back 10 or 15 years ago too. You know, so it can do bigger corrections.
Correct.
That's why Zoran said what he said, because we have to wait for it to stop falling and start to rise before we buy into it.
Yeah, absolutely. All right, let's get to the next one, which is CGF. Now, this one is in a very different scenario. I really like the fact that when we're talking about confirmation, this is what you want to see, busting out through a level that had halted this stock up for so long. And now we're coming back to the moment of truth, because for me, I mean, you can clearly see, you know, for years this one's been held up at $7.50. We've busted through. Now we get the opportunity to test whether $7.50 will be the new base. If it is and we start to reverse on up here, I think this stock has a real chance to get up into those $11 levels, you know, low 10s or high 10s, $11, which presents a lot of opportunity. And you know, that to me is when you should be getting excited about a stock, not, you know, getting stuck in this period where we've spoken about a lot as well. You know, think about the opportunity cost of your money. You buy a stock, you think, okay, fundamentally I like the story, but when are you going to get rewarded for it? Because there's been a lot of times great stories, the price hasn't supported for a very long time.
And we were talking about patience a few weeks back.
Yeah.
About, you know, being patient and waiting for the right time to get into a stock. And this thing looks pretty good. The patterns it's making, that looks really nice. But it's about being patient, not just jumping in because it's dropped back again.
Yeah.
Otherwise you're catching a falling knife. Yeah,
probably the hardest thing, isn't it?
Yeah.
To be disciplined and patient.
Well, especially when you see a move, you know, the stock's been going sideways for 5 years, then you see a move, it's gone up 40, 50%. How many people are thinking, oh, damn, I've missed the opportunity, I've got to jump in now. You know, but when you understand the way these technicals and price operates, the best opportunity may be coming.
Well, that's what I reckon. Here's your opportunity now to get a copy of my first book, How to Beat the Managed Funds by 20%. All you need to do is click on the link below. It's free. All you got to do is pay the shipping and we'll send it straight out to you. But it'll help you understand the stock market, what portfolio style, how to find stocks, how to buy, how to sell, your money management rules, all the things we're talking about here tonight. So again, click the link in the description below. Now, I know we do have a couple more stocks before we move into the next section. So what's the next one, Zoran?
So we've got AIG, Australia, or Limited Insurance Australia Group. Another one of those ones that seem to be on a bad roll today, to be honest. It's getting absolutely blasted and it's literally in a free fall, both on monthly and weekly chart. Yeah, it's quite depressing, to be honest. Level that I'd be probably looking at is somewhere around $5 or $5.50. Long-term downtrend, it's created kind of a double top, which is considered as a reversal pattern. So right now it's another one of those ones that I'd be probably putting on a red color and waiting for it to consolidate and drop back. Like, volume is also increasing once again. So I just think like with stocks like this, what I find is like you have to be extra patient. And whilst there might be good quality stocks in the long run, you still want to make sure that you buy them when they're actually moving up and that you capitalize on it, because if you don't have the right rules and you get stuck in them, it might actually take a long period of time for them to reverse and get back to the point where you entered.
How long, with those red stocks that you're talking about, how often would you look at them? Once a month, once a week?
Probably once a month, I'd say, yeah.
Yep.
Because I mean, even if the stock bottoms out, it takes a long period of time for it to actually consolidate and then start a new trend. And you've got to go with the rules around that as well. So it would probably be once a month I'd be looking at it.
Yeah, because to me that's a really important thing, because I know a lot of people, when they come to us looking to learn how to trade, they might have 100 stocks or 200 stocks and they try and look at all of them all of the time. Whereas what you're saying is, no, you don't need to do that. You're saying get down to what you're looking at and what's best for your portfolio, and then rank them in order of really good, okay and pretty poor, and then obviously then set time limits around your time spent analysing those, and obviously you're looking for opportunities in that.
That's exactly right.
Yeah. Did you want to say something? You're looking at me funny. So
I just think it's at a very important level.
Okay, you can say it and then you can go to the next stock.
All right, I'm used
to dirty looks from Janine, not from you.
Just monitor this level through here. It's a previous all-time high. It's been hugely important for this stock. If I can get my mouse to work, hugely important for this stock for since 2005. So we're talking over 20 years. We've managed to find major moves or reversals from this level. So all I'm saying is keep an eye on it.
Watch this space.
Watch this
All
space,
right.
yeah.
You can go to the next stock, which I think is DVP, is it?
Correct, yes, DVP. Now, this one is called Develop Global, in a different spot to the other one. Maybe Zoran should have looked at this one. But what's interesting about DVP, classic, when we're talking about stocks going through these different cycles that you see, from a visual point of view, initial IPO, you get the hype, comes back to settle down, you get that huge accumulation where the real, interest comes into the stock, starts to rise up and move into this expansion phase. And a real telltale sign of whether or not this price has legs to continue on is how it reacts initially on its first spike out of there, which we saw in 2021. We held that previous high of 2017. Now we're back through again, breaking through new highs. I mean, everything about this tells you that this market's likely to go for another run, and it is. So as long as we hold here, this high around $4, if I can get that through there, which it seems like now we're having a bit of a pullback, but as long as we hold this $4, $13.20 level, that means we're still bullish. We're finding new bases. And if we're in expansion like it very much looks like here, I think a test of that $8, $9 level is highly likely. So I actually don't mind this. I mean,
I actually like it.
My favorite stock so far, definitely.
Yeah.
I was about to ask you what your favourite one, because I was thinking, I was in my head while you were talking, I'm going, is it ABB or is it this one? Because they're both looking all right, but I'm going with Zoran, I think.
Yeah,
Yeah.
it's good.
What about you?
I'm thinking maybe I'll be different. I'll say Aussie broadband.
Say Aussie broadband. Well, anyway, that wraps up our first round, and we have more amazing stocks coming shortly. But now it's time for our trending topic this week. I'm going to go to you, Phil.
All right, so big one this week. Now, over the past week, the world's largest asset manager, BlackRock, has made headlines after limiting withdrawals from one of its funds. Now, investors requested about $1.2 billion, or roughly 9.3% of the $26 billion HPS corporate lending fund, but the fund only allowed 5% of the assets to be redeemed per quarter, forcing the firm to cap withdrawals. Now, this type of redemption gate isn't unusual for private credit funds because they hold long-term loans that cannot easily be sold. However, what's different this time is the size of the market behind it. Private credit has exploded over the past decade to around $1.8 to $2 trillion globally, and the risk analysts are watching is something called a liquidity mismatch. Now, investors can request withdrawals regularly, but the underlying assets are private loans that can take months or years to exit. If too many investors try to redeem at once, funds may be forced to gate withdrawals or sell assets at steep discounts. Now, this matters because private credit has quietly become a major source of financing for companies and property projects around the world. If lending tightens due to redemption pressure, one area that could feel it quickly is the commercial real estate market. So whilst this isn't a crisis yet, it's a reminder that if investors start pulling money out of the nearly $2 trillion private credit market, the ripple effect could reach lending, property and equity markets globally. And we're going to get into the chart of the real estate sector to have a look. But I mean, you've been talking about this for a while. It's a booming market, private credit, and it is an illiquid market, very illiquid.
It is. We talked about this like mid last year or something.
Yeah.
A couple of times. Yeah, about how it could be risky as well.
And ETFs can fall in this.
Well, that was my next thing, if you'd let me talk. But anyway, only joking. But I see the same thing happening with ETFs completely. And I've done a few podcasts on that. I think that it was about October. I did one on ETFs because liquidity is provided by the market makers, but they have to value the fund to be able to quote the unit pricing to buy and sell the units from the retail investors. Now, if you've got every man, woman, dog and child trying to get out of the same ETF at the same time, that's not going to happen.
Yeah.
And you're going to get them freezing the funds or limiting withdrawals, because if you read the fine print, it's definitely in there. And I think it's about, ones I've read is like 10%. They might limit it to that, but then they can stop doing anything for days on end too. So it's always pay to know what you're investing in. That's the major point.
Yeah. And obviously the whole valuation side of things. I mean, we've recently had the whole scandal with the CMFEU and super funds are buying these projects and adding them to their books, and at what valuation, at all this stuff which is not as transparent as a stock market that you see day in, day out. So it's a developing area. Keep a close eye on it because it could be the thing that causes the next major serious issue in economy.
Well, I want to do some podcasts around superannuation and all the risks around that at the moment, because I think it's just getting bigger and bigger because the super funds are getting massive. And if we start having a meltdown in that commercial property sector, I think a lot of people's super funds aren't going to be looking good.
That's right, yes. So let's have a look at the XRE, which is the real estate chart. And look, I mean, the prices have been falling. The real estate sector, which is predominantly made up of that commercial space, is down 20%. It's not uncommon. We saw a dip back in September 2024. But if I just zoom that monthly chart out, you know, right now this month, there are no signs of buyers coming through. Last time buyers came through around this 34.71 level. So we're in a really interesting spot right now, because if we don't see buying come in relatively quickly, then something new is unfolding. And so, you know, if this level doesn't hold, the next obvious level is a push down to 2800. And so you've got to ask the question, okay, well, there's murmurs around with this whole development unfolding. Plus we're seeing price get sold off a lot. So watch this space.
Well, I think we do need to be careful. I mean, obviously, you know, building costs especially in Victoria, are through the roof because of all the stuff you mentioned with the CFMEU and etc. But they're not necessarily low anywhere else in Australia either. And our building costs in Australia are so much higher than what they are in the US and other developed countries. So why is that? And so to me, when you're looking at property prices, they're pretty extreme. You know, even commercial real estate, just trying to rent commercial real estate as an office space, it's quite expensive here in Australia as opposed to lots of other places around the world. So if we start seeing revaluations because of the credit squeeze there, the private credit market, etc., this looks like it could be a perfect storm happening sometime down the track. Yeah,
you just hear people reporting on it and talking about it, and it just the key theme that keeps getting said is smells like 2008 all over again, but you know.
I wasn't going to say that, but no, I almost said that earlier. I think it feels like around that mid-2007, you know, 2005 to 2008, the economy and other things feel a bit like that at the moment. Some of the things that I'm seeing feeling a little bit like that. Both of you guys are too young for that. I think you're too busy having fun and surfing and doing other stuff. But anyway, if you do want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and into some more stocks. Now, Zoran, I know the next one's a rip snorter, so I'm going to let you handle that one.
Yeah, so next one is Nickel Industries Limited. For a change, it looks actually solid.
You happy with this one?
Yeah, I don't mind it, to be honest. Look, I mean, it looks like we've got the low on monthly chart. So we've got the pinned low, which is around 42 cents in April 2025. Ever since, the stock has actually gained quite a bit of momentum. Like, it's also gapped up on monthly chart, which is quite interesting, and it's come back now to actually close that gap, which is always a positive sign and something that I like to see with stocks. On weekly, volume is following through as well, so that's actually quite solid. But what I would eventually like to see is price go above that high, which is around $1.07 mark. So with these little stocks, smaller end of the spectrum, like stocks that are actually with smaller market caps and sub $1, obviously, we would have mentioned on numerous occasions, psychological levels like 10 cents, $1, $10, they can actually play a big part. So if we do go and reverse and go above the February high and hit the $1 mark and continue heading higher, then there is no reason why we shouldn't test an all-time high of $1.80. So look, this might not be for everyone. Again, it depends what sort of trading style and what sort of portfolio are you trying to implement, whether it's a super fund, growth, income, you name it. But this is probably more so for growth as opposed to income, because I don't believe this stock would actually pay dividends.
I don't know, but possibly you're quite correct there, because I'm in an 80-cent stock. But I do, I totally agree with you. It is a volatile stock, so it's better for people a bit more experience on the marketplace. But there's no reason why somebody who has got that skill to get into that stock.
Correct.
It does look really good. It does look like it's going to hit that high again, doesn't it?
Yeah, interesting, yep.
Phil was licking his lips there while you were talking. Now, we're going to get into a Janine controversial stock. I think Paladin next. So
yeah, we do.
Sitting in the chair.
It's finally time to get into this one again, because we have had some comments about Paladin. What do you think? And I found it interesting, on this last run up, a lot of the comments were around the FOMO side of things. Hey, cover this stock. I've bought it. I want to buy it. Am I going to miss the next opportunity? Is there going to be another opportunity? And when we put it all into context, and I zoom this monthly chart out, just have a look at where we sit in things. And that's where you can kind of gauge and say, okay, there's definitely plenty more opportunity on this stock if we are again at the start of one of those new expansion phases. So it's important to revisit it now. It had a fantastic month in January, shot on up, broke through. And right now, I guess there are some defined levels for this stock. Really, $6 is that short-term or medium-term base that the stock has now confirmed. The next level, again, is if we can hold the $9 mark, which is around there. We congested through there, broke up. This stock could pull back. I'll go on the weekly chart in a second, but given we're coming out of a huge, again, you'll see these repeating themes on these stocks, which again, if it's so important. Now is the time. Go and get educated, go and learn, go visit our website, look at the testimonials, because when you see these patterns, it's like reading a language, that's why we can talk the way we talk on this show. This is giving real examples of what comes next. And so right now we're pulling back a little bit on Paladin. And if we just go on that weekly chart, it's expected congestion breaking out. We're pulling back to the momentum line, which if we draw that up through here, all which is quite positive at the moment. So as long as we hold this momentum, around that $10 mark and hold above that through there, we're definitely in trend. And that is promising for Paladin because you're going to get a stock like this. I love these stocks because you get short, medium and long-term opportunities. It's just where you decide to navigate, which time frame you tend to sit on. But there's enough volatility for all, which you can't say for every stock on the ASX.
No, you can't. The thing is, I'm liking this stock at the moment. I mean, obviously, it's in uranium, which Janine doesn't like it very much or doesn't like to talk about it, but it is looking really, really nice. But there's a lot of material stocks that are looking good, all that stocks in that material sector that are looking very, very nice over long term. And I know commodities, just to get your comment, Zoran, when you're having these sorts of conflicts, obviously interest rates and currency, but also commodities generally run, don't they?
Absolutely, yes. And we've seen that with gold and silver. I mean, they had tremendous runs. Whilst they have actually pulled back over the past few weeks, but overall they've done exceptionally well. Copper is another one, uranium. So they all tend to actually do quite well. So it is bullish for that. Yeah.
All right, so let's get into the next stock. Which one are we on?
PMT.
PMT.
Another great one for me. It's looking pretty good. I mean, I won't say it's looking perfect, but overall, I still believe that as long as you can actually hold around these levels, then there might be some reversal or upside. But overall, the stock is actually quite bearish on weekly chart. It's got quite a bit of volume happening. So I would wonder whether there was actually like a news and announcement that came through because the stock got actually quite sold off quite a bit. But if it can hold around 45 cents, around these levels and consolidate, it might start creeping upwards. Otherwise, any further downside, we're probably likely to test that low, which is around 33 cents. And then if it doesn't hold there, we might be going all the way down to around 20 cents, which was actually an all-time low based on the stock. So look, it's not an ideal one, but overall, I still believe the long-term trend has actually started. And we can see that when he actually created an all-time low back in April or March 2025. So as long as it can hold around these levels, then hopefully it can turn around and gain some momentum. There is quite a bit of volume there at the moment, so hopefully the interest picks up. But my concern with this one, Dale and Phil, is there's simply not enough historical data to actually backtest it properly. That's the problem. You're looking at the stock. I mean, it's got 2 or 3 years of information on it or data charting, 2023 or end of 2022. So I generally like to see stocks that are actually going through the ebbs and flows and ups and downs over a long period of time to actually give me a really good personality of how he actually behaves.
Yeah, what just to explain what Zoran sort of said, not that he didn't say it in a good way, is we like to see probability. So, if we can go back over a longer period of time with our trading strategy and get a good probability of being right on that stock, that's better. When we're looking at a short term on a stock, we may not be able to get as many trades through in our back testing, so we might only be able to have 2 or 3 trades. So your probability is not going to be there. That's really what he's talking about. But one thing, Phil and I were talking about this earlier, and I want to bring you into this in a minute, is that what we found is the best traders have the simplest strategies, not the most complex strategies. And we find a lot of people trying to trade the market try and look for that golden goose or that golden holy grail type of technique, but they make their trading complex. What do you see? Because you're dealing with traders all the time that aren't students of wealth within, or generally aren't students of wealth within.
I get to see a lot of short-term traders, so speculative traders. They like to take both sides of the market, go long or short, so try to take advantage of markets when they're going up, but also when they're going down. I think strategy is super important. Obviously, education, strategy, and then that strategy is based on different components. One component can be technical analysis, another component can be fundamental, another one can be psychology. Yep. And I think that's probably one of the most important ones, to be honest. Psychological aspect comes into play massively because what I tend to see over the years is general reverse. What people should be doing is like they let their losses run and they take their profits early on. And it should be quite the other way around. You should cut your losses early on and let your profits run. And there's a number of reasons for that, but one reason is no one likes to be right.
Everyone likes to be right.
And no one likes to be wrong. My apologies. It's been a long day. It's an emotional attachment when you get involved in trading, and everyone's got a different perspective on money and things like that. So yeah.
No, that's fair enough. You're looking at
that's what he said was, even though we said no one wants to be right or wrong, but that's so important because we were talking about this off air. What is the focus for most people getting into the market? It's to be right. If I'm right, I think that that'll equate to success or profits. But the reality is some of the best strategies that you're not right a majority of the time offer the best profit loss scenario or the best risk reward.
Yeah.
And so, this pursuit of trying to be right means that you work in this world of being overly complex rather than going simple, which is what you're talking about.
Yeah, I don't care whether like I'm right on, if it goes the way I think it goes, great. If it doesn't, then I get out. That doesn't bother me.
And it helps you then cut your losses short.
Yeah.
Because you're not focused on being right. You don't care. You're not emotional. It's like, here's what I'm trading. Whether I'm right or wrong doesn't matter. Am I protecting risk, keeping it short, and letting the profit run when it's going?
Well, it comes down to rules, doesn't it? You got to stick
discipline.
To them and then discipline and execute that. Like, there is people that I see with 30-40% strategy. So out of 10 trades, they get only 3 trades right. But they do so well in those 3 trades in percentage terms that it beats out all the negative or losing trades. So, the other 7 trades, because if you got a stop loss at 1%, totally 7% losses, but if you make 5% on each trade, you're talking about 15, net amount is 8% up. So you have to have a strategy, you have to have some sort of rules behind it, otherwise it's just shooting in the dark. And like we mentioned previously, market gets so volatile and they drain you so much that it's hard to keep on top of it, and then it affects your other parts of your life as well. I had a look at it yesterday, right? Because there was a turmoil on the market, and the headline is 120 billion wiped off the share market, right? And I love that headline because no one talks when the market goes up for 18 months and how much in value goes up, but when it drops one day, everyone talks about it. And you look at the news today, because market somewhat actually reversed, no one mentions that. Yeah. It's just fear. It's a fear, greed, emotions. That's what's behind it.
Yeah, journalists always ring me when the market's crashing, but never when it's going up.
Yeah.
Next stock, Phil.
All right, next one is
BMT,
Sol, Washington Sol. Now, this one here, this is an argument, this stock, to be in everybody's portfolio, because when you go back from inception back in 85, this is, I remember we did an article on this one time calling it the Berkshire Hathaway of Australia.
Yes.
It's paid dividends since its inception, never missed. Consistently showing price appreciation. Yes, it has some volatility, especially since 2018. It's been a bit more volatile, but nevertheless, continuously making all-time highs, just showing you this company knows how to give price appreciation over 30, 40 years. So I think this is a candidate for every portfolio. And now what you're getting is a stock that's come off a 20% correction, which is generally what you see through most parts, barring something extravagant. And why it's even more important is that we're coming into a level where we had really strong price agreements at $34 recently. So I think you're getting a nice little, at least even short to medium term opportunity for this one at some discounted prices, because it's proven to you throughout history that it can do it.
Well, it is a nice company in what what I think is part of the success of this company is that, from what I understand, it was like a family company, and they were major shareholders pretty much for a long period of time. So the amount of freely traded shares wasn't as much for a long time. Maybe different nowadays, but it was like that 10 or 15 years ago. But when you got something like that, the family is driving that business, and you're getting that consistency all the way through it. Whereas with CEOs nowadays and some of these major companies, all they're looking for is their big bonus, and the share price is going up, like a roller coaster all over, and strategies change, and so they're proving their worth, so to speak. But anyway, I'm digressing off that, but I do like it. I really do.
Yeah, that's the really important point, what you said, stability.
All right, so we need to get on to the next stock.
So the next stock is Zip. Zip Limited, I've been actually big fan of this stock over the years because I've been trading it quite a lot. I'm going to have to confess that. But right now I'm actually staying out of it because it's in a medium-term downtrend and it's been correcting quite aggressively. So, the levels that I'm looking at is around $1.10. So as long as the stock can actually hold this and not break the major low, which is let me just get my mouse right, which is the low of 1085 in May 2025. Then hopefully there is room for this stock to actually consolidate and start creeping upwards. I do understand that the profitability and fundamentals have been quite good. However, they do have a large number of shares issued on the market, and also they are considering of listing in the US as well. So they're aggressively going for the US market, which is quite big. However, at the end of the day, this market is overall unregulated, and there is always a risk associated with that.
I know we do get a lot of calls, a lot of emails and messages from people about this stock, because I think, it had those stellar rises, where it rose hundreds of percent, and a lot of people think, oh, okay, I'll get on this now. As it's going down, we keep getting the people who are trying to buy it cheaply. So what sort of strategy would you suggest people use on this stock?
Yeah. I've actually been a little bit bent on this stock because a few years back when it topped up and reached an all-time high, I actually kind of entered at that level, which was very, very painful and a lesson to learn. The stock is actually quite volatile as well, so you got to be very, very wary of that, especially if you have a look at the bars here when he was reaching an all-time high in 2021. And also at the same time, when he moves up or down, he can actually move quite aggressively. So I wouldn't actually recommend this stock for anyone that's very inexperienced in the market, if I can say it that way. I'd probably like to see or encourage people to look at it that have actually quite a bit of experience under their belt. The other thing that I found that is actually when it's falling like a falling knife, and you really want to make sure that you got solid rules around it, because just because it's falling, it doesn't mean it's cheap, because you can always continue heading a lot lower. The other point is when it's consolidating at the market bottom, it can actually consolidate for long periods of time. So the rules would be generally, I'd be looking at when it's consolidated at the market bottom and when it's starting to creep up, and then have some of those solid rules that we teach within the course or diploma course, advanced diploma, around it to make sure I protect my downside and then try to catch on to those runs, because this is a stock that you can trade short, medium, or long term. Like, it's got all aspects of it in there, and as long as you can actually do it well, it's got a lot of good potential.
Yeah. Well, thanks, Zoran, for all of that. Now, I want to get into your favourite stock out of those. Was it 8 or 10?
10.
10 stock. Which one were you picking?
I'll go with DVP.
Going to go with DVP. What about you, Phil?
I was thinking I might join him, but you know what? I actually did an interview with the Market Online about Zip, an in-depth interview about how.
You did?
Yeah, that's probably coming out this week actually. So check that out. We go into detail about how Zip might be really one of those buy the dips. So. Oh,
I'm not going to agree with either. I'm going to go for Paladin.
Well, that was
going to be controversial because Janane's not here. I can actually do that. Cool. But anyway, moving on. Shortly, we're going to get into our hot stock tip, but first, let's answer your questions. Now, John writes, I bought Lovisa a few times around Liberation Day and have watched my holding go from 0 to up to 60 to 80% and crashed down, and now down 20%. I bought knowing it had steep pullbacks. Now, I don't know. It's not a question. He's just made a statement, so I'm not sure how we're going to answer this one, Phil.
Yeah, I think maybe he wants us to see what we think of the stock or of his strategy.
Well, maybe, because I don't know what his strategy is, because he just bought it knowing it goes up and down a lot. But let's go and have a look at it anyway and see if we can help him.
Yeah, I think, having 3 buys, if we go to the chart, 3 buys on a stock that is, clearly he's buying a stock as it's falling. So, textbook 101, trying to catch a falling knife. If you're trying to do that, it might, unless you've got an unlimited supply, the only time this strategy works is when you've got an unlimited supply amount of money.
Or if you're trading demo account.
That never ends. Or if you're trading a demo account. And that's funny that he said that. But yeah, I mean, this is not a, can I be honest? It's not a strategy at all. It's very risky. It's somewhat likened to dollar cost averaging, but again,
I don't want to be rude to John.
Yeah.
I just want to open the discussion, because before we talked about I think it was Zoran, you said traders always want to be right. They don't want to be wrong.
Yeah.
So is the case of John buying a few times, which is what he's got in his email to us, and looking at where the stock price is, it's just tanked, which means he's not doing money management correctly. He has no exit strategy or stop loss on that. He's just, in my what I'm hearing is he's hoping it goes back up again.
Yeah.
And he's possibly asking us to say, well, is it going to stop falling? Then should I hang on to it for it to start to rise again? But he's one of those people at the moment that you were talking about. It's not about being right, it's about making money. Yeah. And right now he's down 20% according to his email, and he had been up 60 to 80%. So he's not banking his profits, but he's suffering the loss because he didn't want to sell.
Yep.
So can we help him?
Cut your losses short and let your profits run, but also know when it's time to sell. That's the added part that not gets spoken about a lot. And, just on that chart of Lovisa, there was plenty of opportunity telling you throughout this period through here that it was time to sell, not buy more. I mean, the stock, real euphoric type run, you're not seeing that on the stock. That's generally a sign when, of the end. We get a dip down right after it telling you that this buying was not being supported. We even get a gap, we get a fail, we continue on lower. There are so many signs here telling me that it's time to sell around that period, and he's gone and bought more. And the stock's again giving you another clear example that it doesn't want to go any higher. Fell further. I think, there's no strategy for selling. And not really one for buying. So I think it's important to maybe revisit and take this as an experience to say, look, maybe I'm not doing the right things in the market, or this is not a sustainable way to work with the market, and maybe now's the time, go and think about what kind of strategy you really want to employ, and if there isn't one, then there's an answer. Go and visit that website, mate.
Yeah, earlier before Zoran and I were chatting about how education, people saying education is expensive, and you'd say, well, try not trading very well. Is often more expensive. But anyway, Max's email is next, and he said, I was hoping to hear your thoughts on the All Ordinaries Index, how you think Australia will perform in 2026 compared to other major markets, and who do you think will perform the best? That's a huge question, mate. Really huge question. We do, if you get onto our newsletter, we do a newsletter every Tuesday. It has a market report in there. Number one, we also, Phil and Pedro do a market report for talkingwealth.com every single week that comes out on, what days that come out? On Monday?
Monday, yeah.
On a Monday on talkingwealth.com. So you hear them talk about it, bring up the charts, talk about where the opportunities lie, the sectors in the Australian stock market. But what I want to do is quickly get both of your views on what you think. Is the stock market crashing now, or is it just consolidating a little bit, or it's going to pull up, or what's it going to do? Go, sorry.
I think it's a natural cycle of pullbacks at the moment. But again, it's not to say that we might not go a little bit deeper and we might not retrace a lot more. I'm not saying that. But the way things stand at the moment, I feel like our market has been actually somewhat resilient because, yesterday's drop I was expecting last week, it didn't happen, and all of a sudden our market hasn't actually done as bad today. So if looking at the overall scheme of things, I also think our market has been somewhat underperforming the global equity markets over the last couple of years, especially if you look at NASDAQ, tech-based, and also some of those European markets. So I still feel like we should be okay, given that nothing happens out of ordinary. I also think the Australian ASX market is heavily driven by obviously materials and commodity sector, which has been generally performing quite well over the past 6 to 12 months, and it's probably likely to do so in 2026. So I think we will be okay. I think we should be doing quite well, but it is a matter of picking the right sector, the right stocks, obviously looking, for those good opportunities as opposed to looking at some of those stocks that we showed previously, which are dropping quite aggressively, falling knife, and then hoping and waiting for a year or two, before he can actually reverse and come back up.
Cool. Anything you want to add to that? That was pretty good.
Yeah, that was pretty good. Well, let's see if I can top that. Let's go to the chart and have a look. But for me, I guess the important thing right now in the index is, and we've been talking about this on what you just mentioned earlier, some of those avenues, but our market has actually, if you think about the long-term trajectory, we've broken out, and really the market had been operating to this rhythm since 2008. Same thing happened back during 1990, all the way until it started breaking out in 05. Now, that's why, going out and talking to some media, we were saying back last year, this period through here was when potentially the market could go ballistic. And so as long as it holds here, I think there's still potential to get to 10,000 quick. If it doesn't, we're going to get a deeper pullback.
There you go. Anyway, our next email, Paul, he writes, given the Middle East tension, reminding everyone how dependent the world still is on oil, could that actually accelerate the shift to electric vehicles? Now, could companies like Tesla be long-term beneficiaries if countries try to reduce that reliance? Quite an interesting question, but I mean, it's looking for a crystal ball for us, isn't it, really? I mean, it's not, you could say that, but I don't think it's going to accelerate it. I really don't. I think governments are hell-bent on moving towards more renewables, and obviously electric vehicles are a part of that, but I'll get your thoughts anyway, Phil.
Well, I think renewables requires traditional as well to get that process, the infrastructure set up initially, and we're still at the stage where it's not set up to be self-sufficient. So yes, the requirement for fossil fuels is still relevant today. In terms of Tesla and the EV type situation, you've got out in the US Trump basically slashing that whole agenda, saying no, there is no requirement to be electric moving into 2026, 2027. But Tesla to me is, not really an EV story anymore. I think when you look at the way the cars were performing over the last couple of quarters, and yet the share price is now trading at all-time highs, this company is being bet on for other reasons, I think, for other technological advancements coming. And so, in my opinion on the EV stuff, I mean, whatever is sustainable, I think, is important. And if it were to be the case that we could live off renewables, I mean, imagine everybody went to go pour petrol or do the, how do you pour petrol with the renewables? Those stations that exist, there are only a handful of...
You're talking about the charging stations.
The charging stations, yes. So imagine we were all electric today, and the capacity to be able to fill with the amount of... That's right.
We can't. And obviously, and I don't know what you're going to add, Zoran, but
Please,
China wasn't really into electric vehicles, 10 years ago, but look at pretty much most electric vehicles sold in Australia today are Chinese. Yeah. They're not a Tesla.
And they're so competitive as well. If you have a look at the BYD and the advanced technology, I've actually got a couple of colleagues that bought it, and it's looking incredible. It's actually challenging Tesla at its highest level.
Yeah.
So you might be right. It's all the landscape is changing anyway. But now it's time for our hot stock tip for the week, and here we're going to Zoran for that one. What do we got, mate?
Okay, so the hot stock tip this week is Telix Pharmaceuticals. Before we get to the chart, Telix released some big news to the market today. Telix announced that part 1 of its global phase 3 PROSPECT trial met its primary objectives, with safety data allowing the study to progress to the larger randomized expansion phase, testing its prostate cancer therapy alongside standard treatment. This is positive news for the company, as meeting phase 3 objectives and advancing the trial signals regulatory progress and potential commercialization of the drug if later results remain successful. But let's now get to the chart.
Don't worry, I have that problem with all these pharmaceuticals. When we, at the microcap conference, we had all these pharmaceuticals we had to report on. I'll tell you what.
Yeah.
Psilocybin was one of the ones I got stuck on, wasn't it?
Did it on purpose.
Did it on purpose.
Especially if English is your second language.
Yes,
That's
well,
the main challenge. Yeah, definitely.
Well, let's get into
Let's get into the stock itself. I'm just destined today for all the very, very, dovish stocks that are actually unfolding on the market. And if we have a look at the actual price percentage tool from its all-time high, we can actually see that the stock has plunged 72%. And this is one of those things, because I've gone through this scenario in the past with a particular stock. Like pharma stocks are very, very up and down. It's very volatile, and everything can actually depend on a single trial. So the volumes are actually picking up quite a bit on weekly chart. It's gaining a bit of momentum. It's gained some ground today. However, it's not out of the woods, and it's one of those ones that it will have to wait for some sort of confirmation to basically make sure that it's starting to trend up. Overall, on weekly chart, it doesn't look too bad, but on monthly chart, it's nowhere near for a buy for me. Phase 3 is obviously promising, but one of those things with pharma stocks as well is you need a lot of money to back your trials. It has to go through a rigorous approval as well, and it has to give a certain percentage of obviously longevity in life when it comes to the prospective patients. So for me, it's not a buy at the moment. It's very volatile. I would never invest large sums of money in a stock like this. I would probably play a very small portion of it, and then if it plays out well, you can actually gain some momentum and make some solid money. But overall, for me, it's a bit of a gamble.
Well, it's one of those ones that if you get the right signal, it's going to take off. That's what you're saying. At the moment, it's finding a bit of support. Yep. So, and it could be about to turn around, but we're not sure yet. So we have to wait for confirmation on that. Yeah?
Correct.
Yeah. So any last comments from you, Phil?
Yeah, look, I don't mind these. When you're looking at this chart here, I think I'll just add one more thing is we saw very similar things happen with mineral resources. You know, we looked at it at $20, and very much a play like this, there was one or two others. And, you know, these are the times when often nobody's looking, when the market's completely bearish, that you need to start preparing. So I think the fact that it's pulled back to major momentum, start watching.
Yeah. Now, just for Zoran, like, we don't get you here because you can read a teleprompter, you can say pharmaceutical words. We get you here for your excellent expertise in the stock market.
I appreciate you. Thank you so much.
Phil's here for his good looks, and I'm not sure why I'm here anyway. But if you do want more from us, check out our video around War Panic. Is it time to buy or sell ASX stocks?